welcome to Virtual Payments Canada. I, like you, are ready sometime soon to be back in person, but this platform today gives us an opportunity to talk to our colleagues around Canada and across North America about the topics that are of great interest to all of us at a time of great change. I'm really excited today to share both some research that we have on the topic of payments modernization, as well as have a great conversation with the colleagues that we've got assembled here from Accenture and from Microsoft. So I'll get into a little more background on the teammates that are joining me here. But just before I go into the research, I just wanted to thank Alesh, Tracy, and Peter for joining us here today. Alesh from Accenture, Tracy from Microsoft Canada, and Peter from Microsoft Global. So let's see if I can make the slides work. Look at that. So I am not the most adept at this platform, so I hope that the content will matter more than the form. So I wanted to share some research that Accenture did last summer and fall to really look at some of the things that had changed in the world of payments as we went into the pandemic. So a lot of people were asking questions, what happens to payments modernization? What happens to the business case? And so we wanted to frame the research that we did actually looking at projections that still showed, despite the global pandemic and the economic consequences, that there was growth globally in the payments business. Our assessment is growth at about 6%, with a lot of the high growth coming from emerging markets, although North America, both the US and Canada, are markets with a high degree of growth potential. That's part of why we're all here. It's a great market. At the same time, I think we all know that there are a lot of pressures in the market affecting and really driving the modernization conversation. And what this chart really shows is that while the market is growing, there's leakage that is essentially taking away what could have been greater growth for the banks. And so a lot of where the revenue in payments is going is new players. So fintechs and non-bank digital competitors are taking about 3.9% of that revenue pool. But movement between payment types, from higher revenue payment types to lower revenue real-time payment types, is also real. And then maybe the most important thing happening from all of these factors is pricing compression is actually driving some revenue leakage, and modernization is something that we need to look at there. So when we looked at the market around payments, North America is in a sort of different place than Europe in terms of the modernization journey. And Canada is in clearly a different place than the US, in particular in North America. And what this chart really shows is the level of expected future disruption combined with the current view. And I think because of all the work that is happening to centralize an approach to modernization in Canada, we see Canada is in this middle tier around modernization, and over time is going to go into that upper left quadrant where most of the banks will have modernized, where the system gets a lot more stable and there's less volatility. That's by contrast to the US market, where there's typically relatively little central bank coordination of modernization activity, and therefore market forces really drive a lot of diffusion in how that happens. So that's kind of the context for what we did with the conversations with players. I'm not going to go into many of the things we talked to them about. I'm happy if anyone wants to talk more about the research, but we looked at both wholesale and retail segments. We looked at a range of drivers affecting the economics of modernization. And when we actually looked at the opportunities, most of the people in our research still believed that cash and paper displacement was key. And that is certainly true in Canada, where we see that there's still a pretty strong cash market that has opportunity for electronic payment displacement. I mentioned earlier the questions about real-time payments adoption, though, do affect this direction. And I think it'll remain to be seen what path Canada takes on this front. There are markets where there was very rapid adoption. There are some that kind of are more typical. A lot of the Asian players have taken that. And then there are a range of players who have had real-time payments in place for a very long time, but have not had great adoption. And when I look at, for example, the US market, it has been a slower adoption rate of Zelle, which is our form of bank-run interbank consumer real-time payments, much slower adoption rate than some of the particularly the smaller markets like Sweden and Holland, who had very fast uptake on that. So I'm not going to go into a lot of the details that many folks will know, but there's some interesting stats that suggest, the mix of payments will affect the trajectory around modernization. What I think is most interesting from our research is in North America, maybe even more than any market, there's a strong realization of the fact that we are operating on old legacy infrastructure that doesn't meet the needs of the time. And there's a desire for greater technology simplification, the ability to flexibly integrate real-time payments, and also a desire to lower cost. And so I think everyone in the audience will feel that to be true. What I think is super important, though, for the folks in the audience today, as Canada embarks on the journey around modernization, is despite globally people really sort of understanding why modernization is important, very few players worldwide are satisfied either with the pace and timing or the economics associated with their modernization programs. And this is really, I think, a good jumping off point for a couple other items that I want to have in mind before we get into the panel, because people enter the programs for the right reasons, but they fall behind in the economics, the returns, and in some cases, the timing. And maybe the biggest disconnect, if I can get the page to move, one of the reasons that people have not been getting what they had hoped out of their modernization efforts was, in some cases, the programs and how they got them funded was linked to compliance activities or programs associated with the legacy systems. And I think particularly in North America, this is a risk. So to the extent the modernization program gets bogged down in continuing to fix legacy platforms, you never get to that end game where you're actually able to sunset the old legacy, expensive to maintain capabilities. And so I think this is something that's really important to think about, that roadmap and that path not only to modernizing some elements of your system, but really actually getting to a place where you can sunset costly components of your former architecture. So the big thing that a lot of the people we talked to believed was that shifting the mentality from a cost center to more revenue orientation was really important. That was part of the reason, the rationale for doing the modernization. And yet, most people have not been able to achieve that in how they think about their business case for getting the investment. And I think particularly because there's a regulatory mandate in Canada, there will be a tendency to kind of leave out some of these revenue-oriented, opportunity-oriented elements in the program. So hopefully that food for thought is useful as we get into the part that everybody's really going to be excited about, which is our panel discussion. So again, I'm really thrilled to have this illustrious group of payment professionals. We've got Peter Hazou from Microsoft, who's the Director of Business Development and Worldwide Financial Services Industry Group at Microsoft, focused on payments and core systems. Before Microsoft, Peter was a banker for 30 plus years, managing payments and transaction banking for global banks in the US and EMEA. So welcome, Peter. So glad to have you here. Also from Microsoft, we have Tracy Lagasse, the Financial Services Industry Executive for Microsoft Canada across banking, insurance, and capital markets. Prior to joining Microsoft, Tracy led innovation in one of Canada's largest fintechs and co-founded a fintech accelerator. And we're thrilled to have Tracy here. And last but not least, we have Alesh Novak, who is Accenture's Canadian Payments Practice Lead and a seasoned systems architect and IT strategy lead, currently spending his days focused on Payments Canada modernization efforts around real-time rails. So I think we have the perfect blend of practitioners, people who have been in banking, on both the consulting and the client side, people who are familiar with the key technologies that folks are using to modernize. And so I wanted to start out our conversation with kind of the elephant in the virtual living room, which is COVID-19. And I talked a little bit at the beginning about the fact that there's still a lot of great reason for optimism around the payments business. But I'd love for folks to talk about the challenges and opportunities and what are the most impactful trends that you see impacting payments that have really shifted or accelerated during the pandemic period. And I'd love to start with you, Tracy.
Sure. Hi, everyone. Sure. I think there's a little echo. Hopefully that goes away. You know, what we definitely agree, we're seeing across not just payments and financial services and banking, the pandemic really was a catalyst for driving digital transformation across every technology project, and payments modernization was no exception. But if you take a step back and really think about the timing of the pandemic in terms of where Canada was in our payments modernization journey, one real key trend jumps out at me, and that is, and Margaret, you sort of touched on it with my background, which was in innovation in fintech and paytech. Prior to the pandemic, Canadians were probably a little bit lower, so some people may argue a little bit lower on our adoption in terms of fintech, paytech. And in a matter of weeks, months, we saw the shift from cash to digital payments just skyrocket through the roof. And so that drive in demand and adoption by the consumer base led to drive in demand and adoption of businesses for digital payments. And I think now that that's happened, there's really no turning back from that. And so although the customer experience, customer demand, customer adoption, demographics will continue to be the trend that really drives payments modernization forward, I think your research is very much aligned with our thinking in terms of what the next big trend is. And that is really how are companies, now that technologies have been maturing and there's adoption, how are they going to take advantage of those leading edge technologies? So cloud computing for your platform, data strategies, artificial intelligence, machine learning, RPA. And it's really going to be the deal maker or breaker for the banks and operators moving forward, is their ability to harness that power of technology. And so that would be my trend to watch for moving forward.
Yeah, that's, I think, a really great point. Enabling not just the kind of upgrade to the platform itself, but those hooks in to other technologies that may not even be on the horizon yet, but we know are coming. Alesh, how about you? What are your thoughts? You know, you're looking at real-time rails in particular.
So, I look at the world from, I guess, more of the clearing side, and what COVID, as negative as it is, what it brings, it actually proves to us that if we take the human interaction out of the equation, cash becomes useless. And the need to have a ubiquitous electronic payment, the ability to actually move money around in a ubiquitous manner, is a key enabler of all those solutions that Tracy was speaking to, whether it's a fintech or your traditional FI, to be able to move money around from where it is to where it's needed in absence of a ubiquitous instrument like cash is critical. And I think COVID has accelerated that understanding that we have, and that essentially puts the highlight not only on the traditional FIs in the space, on the fintechs, but also on the clearing mechanisms that we have in the center.
So Peter, you get to have a global perspective on some of these issues. What do you see? Are there any things that you think are fundamentally different in North America versus the rest of the world? Okay, we'll get Peter on back in a second. So actually, let's talk a little more about Payments Canada, real-time payments journey. Obviously, real-time payments historically, have been targeting historically either different use cases, different segments. And in the last 5 years, there's been an explosion of more retail-oriented, central bank influenced opportunities in this space. And I'd love for you, Tracy, to weigh in to what you see specifically different, better, the learnings in Canada, particularly since we're coming on the heels of implementations elsewhere in the world.
Yeah, I love this topic for Canada. So the whole concept of non-bank bank consortiums. If you look at the history of collaboration in the financial services market in Canada, we really are quite unique in terms of our global presence. So whether you're one of the big 5 banks, large FI, and you've set up SimCorp in the past, or Interac even, or you're a credit union, you have Central One, Concentra, Solero, we have this history of collaboration and actually bringing these markets from concept right through to commercialization and operating quite successfully for a number of years. And so when you pair this with these trends that are happening with these new sort of models coming, and there's really 2 things we're seeing emerge in Canada, which I think are also globally emerging as well. So if you take a look at utility plays as an example, so these unlock huge value for banks. As an example, a utility play in Canada would be the ability to do real-time fraud payments detection at the same time you're launching real-time rail. And so not only is that going to create opportunity for those bank consortiums or non-bank players to create new revenue streams, it's also going to create incredible cost efficiencies within the banks where they're trying to actually recover from some of those margin pressures that you spoke about in your research. And so it also has the additional benefit of adding stability to our overall payments ecosystem, which is a nice side benefit as well. But those utilities are really an emerging trend. And the other one I would say, especially if you think about non-bank sort of participation in this market, we're really seeing that ecosystem connectivity and cross-industry collaboration come together. So if you're a retailer, as an example, and you have customer data and you know your customer, and now you can actually combine that with bank data, and the technology is there now. So things like confidential computing and the privacy laws are beginning to catch up to allow you to do some pretty incredible things with your data aggregation and sharing. And I think what makes Canada different, to your question there, which makes me really happy to say, is that so the ideas are there, the ideas are validated globally, but Canada, we have the history and we're approaching the maturity where we're actually able to make these things come to life. So I'm quite excited about Canada's opportunity to try to like bring some of these things to market.
Margaret, let me see if I've got feedback. I have feedback.
And there's Peter from the future.
Go, Peter. Bless our hearts. We travel on despite the technical difficulties, and I think that's a great just almost an example of what we do in payments modernization. Canada can learn from the mistakes of others and continuously improve. I mean, Alash, you're living this day to day. What are some of your perspectives about that uniqueness? I see a lot in the U.S. market with Zelle. It's coming online more slowly because we didn't get the critical mass that comes from a mandate. So I think Zelle, just for example, might have been over the weekend announced their 100th bank. So they've got really good coverage, but there are 3,400 or 5,000 banks in the US. So you don't get that critical mass any to any. What's kind of your perspective on that for Canada?
Every jurisdiction is different. And even the relationship between Canada and the U.S., quite different approaches between what's happening south of the border. Obviously, the contrast we do is not only against the U.S. market, but against the Europeans and the Asians as well, or the Asian markets, I should say. I think the key element here is what's the baseline? Where are we starting from? And in Canada, when I look at the profile of the kind of the contemporary history of payments, looking at the batch world, or rather batch payments in particular, we have had, numerous kind of fit for purpose schemes of various types of payments, whether it's a check exchange, or it's a debit, or it's a bill payment. Everything is kind of a specific fit for purpose. And the kind of the centralized market infrastructure hasn't really kind of cleared those individual payments, providing a kind of a one place mechanism to be able to clear no matter whatever use case I want to accomplish. That was never in batch. With the real-time rail, not only are we bringing in those new capabilities of being able to move a single credit transfer in real time, and with the richness of the data, which is one of the key enablers of monetization, obviously. But we're also leapfrogging that element of the fact that we're bringing in that ubiquitous, use case agnostic single credit transfer, and it's up to the commercial sector to figure out what is it that they want to do with it. And I think that striking the balance between what is central market infrastructure and what is the space where individual corporates, again, whether FIs or fintechs, will compete, and finding that right balance has been, I would argue, probably the biggest challenge that we faced in identifying kind of that strategic intent of the real-time rail. I believe we are actually quite close, or rather we have identified it. And in Canada in particular, going to Tracy's point, or rather to your point, Margaret, about what's happening in the US, Interact with its e-transfer platform is actually playing an integral part in identifying what that future looks like because of that particular dynamic pre-existing to the RTR. I think the degree of change that we're experiencing as a result of that, and the potential on day one with those incumbent capabilities being leveraged, is the right mix for Canada to achieve its intended objectives. And I firmly believe, and I'm quite confident that is the right approach, and will drive benefits in a sense from get-go once the RTR is up and running.
I've defeated the feedback. So this is now global feedback instead of just technical feedback. So I think that one of the advantages, as Margaret said at the beginning, I've been a career banker around payments a long time, so I've gotten quite a bit of experience. And now sitting in the global role at Microsoft, I get the view of many, many different global markets. So one thing I would say is that the issues that Canada is working through now, each market's working through their own set of circumstances, their own drivers. I do think that one of the things that globally the banks are doing to address the non-bank competitors, the GAFA, the fintech, and whatever, is not to think silo. So we've all grown up in banking systems with rails, and everything is just developed exactly, I think, as Alice put, fit for purpose for something. And we end up in this world of where we're trying to mesh a lot of silos. And actually, the new players that are coming, and this is, I think, the lesson for banks in particular, the new players that are coming are not barred, not thinking along those silos at all. So that's one of the big global trends that we see. From a banking point of view, one of the greatest things I think in my career that happened was the establishment of silos. It was in the early 80s, we established silos. Let's make payments a P&L. But I think it's also been the worst thing where we are now. And the trends that we've been talking about, absolutely, it's, we say, good, let's talk about COVID and how it's reshaping behaviors and technology and whatever. But the deeper trends that are underpinning before COVID around modernization and around how to address the non-bank competitors, I think those are the serious big drivers for modernization and how we fit into that. So that's my opening.
Yeah, and I actually want to kind of drill a little bit more on that one, Peter. One of the things that I frequently hear, pundits who are looking from a global perspective say, we're giving away in certain markets the real value around real-time payments, and very often that comes from a siloed lens. If you're looking at a $40 wire, for example, it's really easy to feel uncomfortable about giving that away and think, well, FedEx doesn't give away, first thing next day, transit, they charge more for faster. Perspectives on kind of the, when you bring it all together, the kind of revenue cannibalization that's going to come combined with the opportunity.
From what I'm seeing in terms of discussions with banks globally, is that the perspective, this is not about Benny deducts. It's not about the silo of payments. And I think that's one of the big issues that gets discussed now at conferences like this, is it is necessary to think more broadly. Where's the value? So we've all been talking about new business models. How do we address, client needs, client centricity, the value of data? I mean, ISO, I think we said it earlier before I got cut off. If we're thinking about these kinds of projects as compliance projects, boy, are we really missing the opportunity. It's not even the opportunity for where payments is going, but in a lot of senses, starting with the consumer, the retail side of payments, as we've seen, it's not about paying for something. It's the value is in new business models. And those are in bill pay. Those are everywhere. Those are in B2B. ISO comes to the heart of this. So there's a lot of value to be had, but one can't think, I think, from what I'm seeing in terms of discussions globally, if it's viewed just as a silo and the defense of a P&L, one has to think more broadly. Banks, for example, are in the risk business, in the lending business. So the data, how it helps in those processes, counterparty risk from real-time insights of the flow of working capital or in families. I mean, that's really how it needs to work. So there's a lot of rethink going on now around what do new business models mean. I think everybody gets it. We need new business models, but what are those and how to approach it is not so clear. And I think that's where a lot of the thinking is going on.
Great. So I want to, coming back onto what's happening in Canada, when I look at the history of, industry-wide, network-wide modernization efforts in Canada, there's sort of mixed success. Interac has had other activities. Payments Canada has had other activities. Visa and MasterCard have had other activities seeking to modernize infrastructure. And my observation is the ones that seem to work the best have the narrowest focus. Chip and pin, I think, is a great example. But there have been many false starts with things that are kind of two-sided markets, like mobile payments. So given the use cases that are being addressed are often seen as a stumbling point, Tracy and Alesh, I'm going to ask you to weigh in on what do you think are 2 to 3 critical success factors that the banks can think about as they engage in this modernization journey? And I'll start with Tracy.
Sure. I think, your conversation that you and Peter just had really touches on it. And that is, the pandemic has taught us a number of lessons. But one thing that was really evident in Canada was, we had projects, not just payments, but across different technology programs that had 2 to even 7-year implementation plans. And then the pandemic came along and we saw these multi-year digital transformation projects actually get compressed to months. And they were able to actually do these things and manage risk at the same time. And so there's that alignment of use case and everybody doing it, but there's also a bit of a risk aversion. So we need to do things in a very safe, structured way, like we've already done it. And the pandemic really forced us to change our mindset, our processes, and our approach to do things much more quickly. And, we had to manage risk. So I would say a critical success factor moving forward is it's a softer one, but it's that mindset. Don't go back to how we used to approach our projects. And the other one I would say, Peter touched on it and said, banks need to think of themselves in terms of being in different businesses, whether it's lending. If you go one step, I don't want to say further, but another take on that is, we're moving from, payments being a transaction business to banks and payments being a data business. And so you need to now also look at what are the new KPIs you're going to measure your success against in order to be successful. So, as an example, everybody knows that data is really valuable, but your ability to access it, aggregate it, scale it is really important. So KPIs like maybe developer velocity are going to need to be incorporated in your strategies moving forward. So focusing on a key role like a developer and giving them, and Margaret, you said it as well, so they can't spend 50% of their time trying to figure out how to access data in legacy technologies and legacy processes. We need to give them the tools, the access, the ability to unlock that value of data. So it's a mindset shift, new customers, new competition, new technologies, that we can't just look at how things were done in the past or how other geographies did it and hit repeat.
So how about you, Alesh? What would you add to that?
It's funny. I'm acting as a technology delivery lead for the RTR, and my key recommendation is don't focus just on technology. This is much broader than that. Essentially, for the ecosystem, the modernization capabilities bring necessary changes to not only how we view kind of the overall business strategy of payments, and as an enabler to other capabilities within the traditional FI world, but also how do they operate? How do the FIs operate today, and how do they even compensate? I think that all of these elements, the human element, is actually quite critical in being addressed equally to the technology that's bringing in the change. Because, let's face the reality: the best technology will fail if the human element isn't behind it. And I think that part is for me, I would argue, probably the one that I on a daily basis struggle the most. And I guess in a positive way, but that one is the one that requires the attention. Obviously, besides that, we do have to pay focus to fraud, because solutions, especially when it comes to real time, fraudsters do find their way, and they will attack it day one. We know that, and they do in every single jurisdiction, because that is like a magnet to be able to move money and be able to hide their trail as quickly as possible. So speed is, of course, real-time element is highly attractive, and fraudsters gravitate towards that, and therefore the focus on fraud and all the way upstream to the glass is key. So it's not just the fact that we monitor fraud exposed inside, let's say, the RTR, the rail itself, but bringing it all the way up to the glass. So capabilities that whether it's multi-factor authentication or authorization of payments, setting individual limits. I mean, these kind of things need to be embedded in the standard fabric of the industry. And obviously, along with the human element and the technology implementation, are key to the success.
Yeah, that actually triggers a thought that I want to kind of follow up on. Those are really two sides of the same coin. When you think about user experience and real time, it meets that need for, instant gratification, but that's the perfect opportunity. It's like the honeypot for a fraudster. And so, so much of banking, even if you think about the physical structures of banks, used to be about making it very clear, about all the barriers to get to your money. And now, the user experience paradigm is trying to reduce barriers to get to my money or your money. But I don't want bad guys to get to my money. So what do you see, maybe I'll start with you, Alesh, what are some of the benefits? Because when I think about, like, I just opened a new account at an attacker bank here in the US. And they're using, I'm assuming, Plaid behind the scenes to move money in what seems to me to be near real time. I don't actually know, what fraud checks they're running. I don't know what authentication is happening, but that was seamless. It was, I did it on my mobile. I've never been on the website. What are, from a technology and an experience standpoint, what are some of those ways of balancing that?
These guys, right? I mean, look at it this way. Today, we can drive a different secured environment against biometrics, entirely different than what we did 15 years ago, right? Where we were dependent on text messaging solely, right? I mean, today, whether face recognition, finger recognition, and so on. So obviously, the technology landscape has become much more sophisticated, much more precise. We also have to, worry about the kind of the digital identifiers, rather the digital signatures. So things like non-repudiation is correctly handled, right? And I would argue probably that one is probably the most complicated element across all jurisdictions. I personally have worked in Europe for many years, and even in markets where kind of what I would call as kind of a centralized control of the regulator plays a more significant role than what we experience in North America. Even there, the ability to have the kind of the digital signature was a lot more difficult to attain, or rather a digital identity, I should say, right? So being able to address these concepts and embrace them correctly into this new world of payments, I think, is the key to the success in terms of having a secure and safe environment.
Tracy or Peter, anything you want to add to that kind of balance?
Yes, it's not just retail payments. Obviously, real time, where fraud is an issue, and arguably the big money is in the B2B for fraud. So it's really across both, and also real time. We get confused. It's not just about being faster. Self-evidently, it is fast. It's real time, but it's about the new business models and the new value that comes from real time insights, and I think that's really where a lot of the play has to go, digesting the cyber and the security elements of it.
Yeah, and I would just add to that, like, these are obviously active conversations as we look to launch the RTR and the high value payment systems in terms of that balance. And when you look at concepts like open banking or consumer directed banking, or finance as we call it in Canada, combined with real time payments, there's this desire to front and center keep the security and stability of our financial system strong. But then how do we encourage innovation And then how do we balance that risk without impacting the consumer experience? We also have to be inclusive. Canada, is primarily banked, but there are still underserved markets. So we can't put so many digital requirements in place that we then end up excluding pieces of our payments ecosystem. So there really is a balance. And I think some of the things, Alesh, you touched on it, that are changing that can potentially help us with this is really around, so even when we look at fraud and centralized fraud services, the large banks have, well-established, well-defined, secure fraud methods. And as we open up the market and you combine that with technologies like confidential computing, allowing and privacy law updates that are giving us now the ability to aggregate and analyze data across an entire ecosystem, we do have that ability, if we can get the market to come together, to create secure transactions and still an inclusive environment that doesn't put so many barriers in terms of customers. You don't want to have 3 authentication methods when you go to tap a bus fare, as an example. So how do we sort of balance that liability, risk, and security of our system? It's challenging.
Yeah, I think that's a really good point, and I liked Peter's point too about B2B payments. A user account takeover or initiation of wires through an email compromise, spear phishing attack is a real problem. And so, if we can add forensics that don't actually require the user to have to do a whole lot more steps, that both could make it easier for the user and more secure, which I think is, to Tracy's point about balancing that innovation layer. A lot of what's happening behind the scenes around the payment, using data and analytics to determine the similarity of this type of payment to other payments that have been made from this account, so that it's not getting in the way if it's a routine, predictable, same payee, but maybe putting in some inquiries if it looks out of band. So I think those are all really interesting things that kind of begs the data analytics question. One of the things that I hear a lot about, everybody say, data is the new oil and the new business models will be all about the data. And yet the way banks have historically viewed the data and payment streams kind of mashing up together is often very inflexible. And when I look at fintechs mining data that is from a variety of sources, having the payment happen here and then mashing it up with data from different sources, I'd love a perspective on trends around data, including what we're doing to standardize how around a payment with ISO 222 standard, with that kind of hardwired mentality that I think is best encapsulated by purchase card level 3 data. Like we're going to force it down a pipe a certain way in a certain context. And we all know that there are any number of other ways that businesses solve for that data question around the payment. So, maybe I'll start with, we'll have a food fight. Who wants to go first?
Let me jump in here. So the first thing is not to conceive of data in a silo, because banks very often, it's part of the P&L of the payments department is payments data. And that, and then, okay, how are we going to monetize this? That's always been talked about. So we're going to try to sell reports or sell value-added services. Actually, one of the great changes in financial services is this: it's not just about banks, which are the tradition of doing payments everywhere, and this is what we see globally. The non-bank competitors, in particular, fintechs, big techs, GAFA, you name it, have a totally broad view. So in other words, the data from payments is used to feed a completely different area, not in the P&L silo. And I think that would be the first step, is to think more broadly around that. And of course, through the tools that Tracy mentioned, there's a lot of ways to augment the data, non-structured, coming in from other places. The whole changing supply chain, we touched on B2B earlier. I mean, another one of the lessons of COVID is that the global supply chain, partly it's COVID, a lot of it's geopolitics, whatever it is, but these changing, shifting business models with data at their root, it's about data. Trade finance actually is not about processing paper, letters of credit, standbys. It's not that. It's really the richness of the ecosystem with global players around data. So there's so many different ways to look at data. Conceiving it within a silo of how do I sell my data is, I think, would be mistake number one. At least that's what we're seeing from talking to business globally.
And Tracy, you were telling me about something in Canada where people are looking at data around fraud and thinking differently and more flexibly about that.
Yeah, like we have in Canada already. So, relatively, and again, this goes back to, technology driven payments approach and leveraging what's available and in the maturity that we're seeing in the market. There's, new technologies. It's called confidential compute that actually does allow businesses that previously couldn't aggregate and share data to now do that. And so now it's a matter of testing those use cases and bringing those use cases to light. And we are seeing that in terms of, sharing data related to fraud. And that can be across insurance. We haven't talked a lot about insurance and payments modernization, but it can be done in insurance. It can be done in banking. We had some work done with one of the large financial institutions in terms of sharing retailer data and payments data to create hyper-personalized customer experiences. And really, the value for data and payments, there's no question that everybody sees it. And I don't want to focus too much on the challenges, but still the maturity of our ability to access, aggregate, scale the data, the skills that are required, the data strategy, the data governance, these are all still the challenges. So getting the data out of, silos or disparate systems, those are real challenges. So the technology is now there to help you quantify business benefit, but we really need to get access. And, in Canada in particular, I think we're all following very closely what the federal government is going to do with our open banking initiative. It wasn't addressed in this year's budget, so it leaves us hanging yet again. But, that's also going to be a little bit of a game changer when we look at how fintech, paytech innovation happens in relation to how banks are leveraging those historical data sets.
Great. So given the time, I'm going to switch to the audience Q&A, and we have a question coming in. And given the way the screens work, I can read part of it. Can you speak to the impact of the trend of, I think it's digital currency and central bank digital currency? I can't see the whole question. But Alesh, maybe if you want to talk about the world of crypto, central bank digital currency, and how this is lining up with the questions around payments modernization, because obviously we all know, well, it may not be perfect yet. Stable coins, CBDC are coming. So how do we think about that?
So, in short, when I look at the modernization program and its scope in the foreseeable future, it simply doesn't. And I don't want to sound negative here, but there is a prerequisite here, and that is the ability to actually regulate. In essence, when you look at the role of the centralized clear, it's about there are multiple elements that make the role, but one of them is the safety and soundness. And in absence of regulatory control over the new trends such as cryptocurrencies, it's out of balance. So I think in general it's an inevitable trend. It will happen. I don't think there is any doubt of the fact that it basically the next generation of modernized payment system needs to accommodate for these new trends. But at the point in time right now, I think I would say is that the prerequisite is the regulatory framework around it. Can the RTR handle a cryptocurrency? Absolutely, it should, and it will. I mean, it's not being necessarily designed against it, but it will be able to handle it. And I think I'll maybe delve into a little bit more into the technology of blockchain. Certainly, the next generation right now is about a messaging architecture. And I know Payments Canada has looked into and is actively looking into basically distributed ledgers and the overall technologies around the distributed way of handling payments. I think it will happen. The question is when, rather than if. But in all cases, the regulatory framework and the regulatory environment has to precede that.
So I got another question that I'm going to actually turn to Tracy, given her fintech background. So global tech players are, the question doesn't have all the words, but I think are more competitive in some ways than banks, because the banks are very heavily regulated compared to fintechs or global tech companies. You've worked at one, you work at a big tech now, kind of, how do you think about that? How do the banks compete?
Yeah, and I'd start, first off, coming from a Microsoft perspective, we do have a bit of a differentiator in terms of the approach we take in terms of big tech and how we, don't really enter competitive fields, within banking. So that's one of the things that's really core to Microsoft. But when I look at big techs, really what they're driving is sometimes a decision. And so we saw this maybe with Google Plex. We're seeing this with, AWS as they enter sort of insurance. They're partnerships. So they're playing on the fringes and they're leveraging what they have, which is ownership of customer or access to channels. And when they partner with financial institutions, the financial institution potentially gains in terms of distribution channels or customer, but they're losing in the terms of margin and then disconnecting from the customer experience. So it's really driving large financial institutions to somewhat make a choice in terms of volume versus value and their strategy of what they want to own moving forward. So it's yet to be seen in terms of how it'll play out. But I think that the lack of regulations for big tech firms does give them a little bit of an advantage to play a little more freely.
Okay, well, we're running out of time. And one of the things I did promise our speakers here was we're going to do parting shots. So while I give them a little bit of time to think about their parting shots, I want to thank everyone for their time to talk about these great topics around payments modernization. And if you are interested in learning more, feel free to reach out to me. So parting shots, start with Peter, 30 seconds.
Playing in payments is really about thinking, getting your mindset around thinking beyond the silo. The silo is the killer now.
Alash.
So, for me, I think, and sitting inside the boat of the real-time rail, I think the key truly here is the way of embracing this change, that it's not a technology. It's not a technology alone. This requires a change across the entire playing field.
Okay, and last but not least, Tracy.
I'm going to echo it. I'm going to take, the pandemic was a personal learning year for me. It should be a professional learning year. And although I, recommend you have a technology-led approach for your strategy, keep that change in mindset. We've all had to develop, echoing on your volume on a webinar, roll with it, take the information and move forward, as opposed to looking backwards at what's been done by other peers. And Margaret went on mute right for the end.
Sorry, thanks everyone. Really appreciate it. I think we're going to get dropped out any second now, but again, it's been a pleasure. I hope you enjoy the rest of the conference and have a great rest of your day. Take care.
Thank you. Bye-bye.